All right, what's up, P? How's your week?
Oh, really good. I mean, just beautiful dip on Monday on Coin in particular, and then it just took off just right through my levels, tradable every day. Um, just a lot of things on the hot list, went off, and then looking at it, a lot of that stuff we picked was kind of risk on type stuff, and it kind of makes sense with how the market went. Um, just really a kind of like solar in particular was just great. Really a strange week in that some of the like Facebook and Amazon had these big earnings misses, but it didn't take the market down. And for me, that's just part of like my learning process, right? Like I haven't been doing this, for a decade or anything. So I've never really quite seen the market react that way to earnings misses. Like usually the expectation is Amazon misses, SPY is going to drop, 1.5% minimum. But it didn't react that way because there's other things going on. There's other factors. There's, expectations of a pivot, all that kind of language that comes out. So it was just a really interesting week, even more than just trading, to just sort of learn, because I'm just always watching that.
Yeah, definitely. I think you hit the nail on the head for me right there. Like watching what we anticipated with bigger names, kind of taking their 20% as we called it out, and the overall market not going down. That's the week where you do expect that old spy to dip to the sub 340s or whatever. If it's going to go down there, and that didn't happen. So
Yeah.
that was kind of interesting to me. I've I've had a bias. Luckily, it's been right. That the beginning of the week is just better than the end of the week because people don't want to hold things over the weekend. Just too much time for things to happen. Um, so I've been lucky the last 2 weeks with the Monday Tuesday kind of being good. This week more so than last week because obviously I was more prepared when you anticipate something happening like that. Um, the hot list, though, Jesus, take a moment for that. Um,
Yeah.
like, yeah, I had to stay Tuesday in the room. You cannot catch all of these. Like, don't feel mad if you missed one. Just focus because it was the whole list. Like for 3 days, I think there was two plays. One if you don't count one or two if you don't count the ETFs on the hot list that were red during the day. And then they usually had a good day the next day. So I mean, most stuff had continuation for 3 or 4 days on the list. It was really really easy to trade. Um, One thing I didn't do is go long on any of it. Kind of not necessarily kicking myself in the pants, um, but I'm 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 thinking I might have missed the boat on things that we nailed levels on. Um, the big mouse would be one of them for sure. But
Yeah.
there's
Yeah.
just a
Kodak stands out. I mean, that was just really smooth all week.
Yeah, yeah,
Just
but looking at the list still and some things that I found this week, I mean, I constantly say to people, it's not going to all get up at the same time. I do think we're in a getting up environment right now. So finding the ones that are gonna, get off a bottom and hold a new level, like old Roblox and stuff like that, did in the last
yeah.
rally. I think that's where your time's better spent right now than worrying about missing everything that's running because it's impossible to catch everything that's running.
Yeah, and Twitter discovered Hut. I noticed,
Say that again.
but Twitter discovered Hut.
Oh yeah,
Sure.
God. I think I caught that Friday. Those guys were on it late. It was
Yeah, yeah.
Manziel and them guys, which those guys aren't horrible traders. They really aren't.
No, no, no.
Um, they're just expensive.
Yeah.
um, so I did a little disservice. I'm the I guess the MC or the moderator of this session last week, and we did not talk about Spy. And I don't know why, but I totally forgot it. And I think you kind of like low key mentioned it in the crossover to the next one. So this week I'm not forgetting it. So where are we
Yeah.
at? Where are we at with Spy?
Well, I think not that it's going to happen, but the clearest read on it is a test of 400 into the rate hike announcement, which then the assumption would be that it might drop. But it's kind of interesting this time because the expectation is 0.75. They're probably going to do that. But what people are looking for is any kind of hint or language of
Yes.
whatever, a pause, pivot, whatever
Yes.
you want to call it, that they'll ease up in with future rates. And if that would be a really bullish signal, I think. But again, you have to sort of think of it, the day it's going to move wildly without any real reason. Like both directions, right? It'll drop and then later it'll pop back up. So you got to be careful trading it kind of in the moment. But I think more on a for the next few weeks kind of thing. If it's sort of a bullish signal feeling, we could get a pretty sustained move here, and you could go back to like 410, 420, something like that. I think there's a possibility of that. To me, my most, I guess, confident read on it is that it's test 400. I think leading it early in the week.
It tried to Friday. I mean, we pushed all day
Yeah.
Friday. I didn't look at this. I don't look at this chart regularly. I got a question because I know my answer is a solid. I'm 100% on my answer, so I'm curious on yours. Would you have gotten SPY right last week? If we, how we normally say what we think SPY is going to do, would you have got it right last week?
Um, Monday, Tuesday, yeah,
Okay.
I would have.
I wouldn't have. I wouldn't have at all. I would have figured. I would have probably, had it trailing that 170 and failing on the ERs.
Yeah.
4, 5, like just staying at 170, which is kind of where it broke through the last Friday. Spice had 2 really good Fridays. Look at that. 1, 2, 3, 4, 5. Yeah, Spice had 2 real. That's against everything my bias has. But no, I would have got this totally wrong. I would have thought we would have broke through because of those ERs being bad, which they were. So I would have been right about that and wrong about this.
Yeah. That's where I would have been wrong. Like late. Like I sort of assumed that Amazon Meta would be bad. I thought Apple would probably miss. And then I don't know that Apple move 100% wrong there. I mean, I noticed that 155C, was getting a lot of activity in the weeklies. I didn't really put a lot of stock into that. That ended up being like a really great contract. But I'm kind of wondering for Apple to have its best day in years, if attribute that to institutional rebalancing or whatever. But I mean, it just I've never seen Apple move quite like that personally.
Yeah.
So that was definitely surprising late in the week. And then that's really the explanation for the big pump on Friday to me.
Sure. Oh, that does make sense now. That does make sense. What surprises me on the Apple is the after hours dip. Like it didn't move until market open. That was very interesting.
Yeah, yeah, yeah. I think it looked like it'd be flat, like just
Yeah.
1% up, 1% down, which for options just kills it. But yeah, that was quite a move,
especially on a Friday, right?
Yeah, yeah.
Perfect. So this week, looking a little forward. Let me get back to the big guy. What do you see that 400 test here early? I heard that.
Yeah, and I mean it could. If 410 is maybe a little much. I hear people talking about that. There is definitely some potential for that, but I think that 403, 405, something like that is what I'm looking at.
I like it. I got bottom of the volume profile 70% is like 394. So I think you do get into especially with some good news or anticipated good some some normal news. I don't know how to say that.
Yeah.
Um, I think yeah, you get up into that range. It's kind of got a weird. Let me zoom in here. We kind of got a weird flat bottom. Like this doesn't want to go below 380 last week. Like it fought 380 from a chart perspective last week. So I guess that would be my key level to the bottom. Um,
Yeah, I would look. I would look for sold puts there. And the sold puts at 380 have been bullish. So that's definitely a good spot.
yeah, this chart's so fluid. Like the levels don't. You have to update them almost weekly.
Yeah, yeah,
It's different. That's why I like stocks with a little more history and a little more holders because they just have levels that will never give. I mean, this has components, right? That's what moves it.
yeah.
Oh, perfect. Let's get into. You said you want to talk about the Dow a little bit.
Yeah. So if you call up the chart for DIA, while SPY and QQQ have been, just bouncing around and getting some hard rejections and things. DIA had its best October since 1901. It's I think like over a 14% move. It's only 14% away from I think from all-time highs. I got to check my math on that.
Your
But anyway,
370
it
is
had
your all-time high.
yeah, yeah. So basically, like, it has just been consistently moving, and you have some stocks in it that are actually, have been hitting their all-time highs. And when you look at like what the Dow Jones Industrial Average is, just to give us a little history here. So it's an index of 30 prominent companies listed on stock exchanges in the United States, and by its name, it primarily started out as um, a, a way to track the industrial sector, which was like the most important growth sector of the early mid 20th century, right? And so then like tech comes in, and so you start to get tech replacing some of the stocks in the Dow Jones. And so that means that like right now there are stocks like Apple's in there and Intel, but then you get like Cisco is in there too, but then it's like Home Depot, Caterpillar, McDonald's, Boeing, Procter and Gamble, and Dow, the chemical Dow, Walmart, Disney, Johnson and Johnson, etc. And so, as I say those, you're going to recognize some that like these have been really consistent hot stocks lately, like Caterpillar, etc. So it's I mean, as far as like for trading, the Dow, like the DIA is a better, if you just look at the way it moves, it's a better ETF for swing trading than SPY is, or QQQ. And that I'm not like, that's not my like buy signal to enter calls here. It might be a little overheated, and it's also worth considering that the Dow Jones leading the rally is not necessarily the most bullish thing, right? Like that you could we could get a big pullback based on Fed news or whatever, and SPY will just come right back down to recent lows, whereas this actually has more room to fall kind of more smoothly, I think. So it's kind of worth considering, worth looking at if you like to enter trades that without as much babysitting. DIA is a better option than SPY. So that's kind of why I wanted to bring it up.
Interesting. Definitely it looks like a slower moving chart.
Yeah, for sure. Yeah, you'll like it had a. I mean, it's rare for it to go up over 2% like it did. QQQ, you see that more often. You're going to see moves of like 0.7, 0.8, which is why, and for a swing, you want like longer expiration stuff and just let it go, let it capture whatever momentum it's got, and you can usually do pretty well on that.
I like it. I like it. It's one thing I didn't really mess with a lot before I hooked up with you is ETFs, but that SQQ thing has been great. Cold, the natural gas
Yeah,
ones, those have been great. Outside of Gush, I really didn't mess with them a lot, to be honest with
yeah.
you.
SQQQ is I mean, that's a good example of really one that fits this kind of chaotic market with a more less hands-on trading style, where like you're not really that concerned about these 1% spikes or whatever. But if your overall thesis is they're going to pull the market back here, you can catch 5, 8, 10% just in shares with SQQQ. And if you're wrong, it's not the worst thing in the world, because it's going, you get it under 50 and it dips to 47. It's
Mm-hmm.
not really that big of a deal, because it's going to come back and it's going to go up to 54 and you're fine.
When you guys, back in the old Wild West days, um, when the room would be, and I'm talking like the old room would be like you use SPY to trade, right? Like you watch SPY to enter trades, and I just didn't really ever understand that. Like it just didn't make sense to me, nor did it kind of like line up. But
Yeah.
it does with SQQ, and I think it's just because of how my style is, right? Like when I feel things are overextended, I can go look at SQQ, and it usually lets me know. I got the feel of the chart, and then you can swing it when it does get overextended. It feels like. Um,
Yeah, absolutely. And I think that you start to learn that like certain stocks that I trade out by moving favorably, they got no chance. Like Snow or Dash or something. But then
mhm.
others, Enphase or Lemonade, will kind of do their own thing, and it doesn't really matter if Spy's falling, they could still be green, and they're just responding more to their level. Um, so yeah, I mean that's definitely the case. And then the more specialized ETFs, you're not really going to see oil run when XLE is falling, so you kind of keep an eye on it in that regard.
Yeah, I think when SPY is falling, I'm looking for things to hit my levels, right? Like it just so SPY doesn't work as that kind of indicator for me. Like I don't know, that's when I'm fishing. Like
Yeah,
I
right.
want I want I constantly want SPY to drop. I guess that's the way to say it. Low
Yeah,
key,
yeah,
like I want to have SPY to have really bad days so I can go through charts, see what wouldn't give up, and then play the reversal, on the rebound coming back the next day or two. That's just how I like to play.
yeah, absolutely.
So
Yeah.
so SQQ does the opposite of it for me basically. Like you can tell, all right, this is getting beat. Like when it's in the 40s, market's getting extended. You could just tell. Um, it worked well.
Yeah, and one thing too, there was a really interesting shakeup in tech on Friday, where like, so if your service relates at all to the environment that Amazon talked about,
Yeah, yeah,
particularly with cloud software, you had a tough day.
yeah.
So like Snow's a good example, and I posted Snow in Colab with this in mind, and it dropped. But then semiconductors were really hot. For one thing, even like Facebook talked about increased demand there, and then just some that had been struggling and kind of beaten down got some relief on Friday. But it wasn't like the whole sector rising together like you see in a more typical day. So those kinds of divergences in subsectors are always something that you want to be aware of too. And we talk about it all the time with, like, we were into cybersecurity when the rest of tech was really fumbling around. And now you see semiconductors getting a little more momentum. So there's cyclical moves within sectors that I think are worth looking at too.
I've always noticed, and it's kind of like I don't know, really stupid simple, but it's pretty damn consistent through the years. If the blue chip of any sector has bad news or pullback, or in this case, just a shitty ER, the other ones do good. They're like hyenas. They're just gonna. There's like the the monopoly of the market share of that sector has a chink in their armor now, and they would be the likely ones to pick up that extra market space. And I think you've seen that a lot with Amazon. Just their competitors do good over the after the report came out. Like you kind of like when you talked about the apps, I noticed like all the crappy apps out there kind of
Yeah.
picking up.
Yeah, right. And so uh, you know, Snap has the ability to take down Meta, but when the opposite happened, Snap actually did pretty well. Like so, you didn't see Snap fall with Facebook. It, in fact, recovered very well, went up 5% on Friday. So yeah, that definitely happens.
Well, and just like Amazon with like the Uber Eats and stuff, and Uber or the DoorDash, like those, the Amazon has that market too. So those
Yeah,
guys kind of peaked up a little bit. Just anything that they touch. I mean, Amazon's a tough one because they touch everything. Um, but even mall stocks. Did you add that too? I kind of noticed that there's a few mall stocks that I didn't think should be moving. I couldn't find news on it, but they've been trending up after that news, and it's just kind of interesting to me. Um,
yeah. I didn't expect back over $20 anytime soon. So that, yeah, that's been interesting. They're
yeah,
kind of on my radar again
was that
based on
Macy's?
that.
Macy's?
That's the one I was looking at. Yeah.
Yeah. I put mine's on the list, Build a Bear. I just,
Yeah.
it just there's a couple of them, but no, I noticed Macy's too. I mean, we were talking about that down at 16, 18, being able just to like we'll have time to wait, and it took off. But yeah, just something that I always like to watch when the blue chip falls. It has to be the blue chip though. It has to be the biggest
Yeah.
one in the sector. When they have like bad news, the other ones always like they just get a little blood in the water. It seems like, and they trend up. Um, and we've seen that a lot with the tech sector this week, I think.
So I had a kind of a fundamentals stock question for you,
Shoot it.
based on something I saw. So I saw I read a breakdown of, try to find it, of Microsoft, and like trading its price and its valuation
Okay.
being really like as far apart as it's been in some time. That was the phrasing of it. And what exactly would that mean to you? Like which numbers, like PE ratio or whatever, like kind of jump out to you when a stock is sort of like that?
So I don't like the PE because the that is just kind of based off of the earnings, right? So
Right.
that's a suggestion in my opinion. Um, you do want them to be maintaining the growth um, that they're saying with their guidance, right? But
Yeah.
without guidance, it's just a guess in most cases. So I'm
And I
a book value cash guy.
okay.
That's what I like. I like going off of that. And Microsoft currently is like 10 times book value, um, which isn't bad. I mean, there's companies that are 50x. I could pull up some right now, and they're still 50x. Maybe they're talking about it being as close in that range as it's ever been. Um,
They I posted what I saw
Let me
in the
see
main
what you're
chat.
looking
So
at. Because yeah, I think so it's oh yeah, okay, so that's just a free cash flow, um, and the price of the stock, and they're saying that's the
yeah.
most since. That's just kind of a skewed statistic, right? Because it's just taking one indicator. My book value
Okay,
has that and everything else in it.
kind of my question on it. Yeah.
Yeah, yeah. So the only thing right now is having cash on hand is a flipping great thing. And yeah, they only have like $5 a share on hand right now. I mean, this is three something. Who knows how old this is, but yeah, um, yeah. I mean, it's. I don't think that's something for like Nikola, right?
Yeah,
That's not a
yeah,
Microsoft
right.
prop. Like Microsoft not having cash. Um, ooh, that's a good example. Intel. Let me pull them up. So like Intel, I bet INTC, correct? Yeah.
Yeah, yeah.
Intel. Yeah, they're in about the same boat because they're hurting right now. Um, but again, cash on hand to me or the having free cash really doesn't do anything for these guys because they're not growing their business in that like they Microsoft isn't going to need like a billion. They're not going to have to go find $1 billion. It's so it just
Right.
really it's a to me it's yeah. I think they just took one stat here on you and tried to get you to believe whatever their bias is.
Right, and it's a bear, one of those bearish accounts, and they're, they find stuff like that all the time, and Microsoft to me, I mean, that's a stock that had been flat for years, right, and then
Sure.
had this, this huge move, um, pulled back under 240, could definitely fall back to like 200 or something in, bad conditions, but still, is sort of one that I look at as not really going anywhere, not necessarily going to be a bad buy unless you got it over 300, then you're in some trouble probably. But yeah, no, that makes sense. And
I mean, we were at
um,
200 in 2020 on
yeah,
Microsoft. Just, I mean, if you go back to that, well, that's where most stuff is checking back to right now, anyway. Um,
right.
but yeah, from a technical standpoint, Microsoft is not in trouble. And if they were, I think you would see it more on the service side, right? Like it's more in stuff that's already out there. Like that's where they have the lockdown on is people use their system.
Uh,
It's a service they pay for, and then they just take that money
yeah, and there's,
and
I mean,
reinvest.
and if tech overall is healthy or up or even trading sideways, I don't think you're going to see Microsoft have some dramatic fall, in again sector, right? I mean, I
Yeah,
just think they're going to kind of stick with it. They're too big a part of SPY and QQQ to just sort of fall on their own and fail. I just don't really see that. So yeah,
yeah. I kind of like look at Ford too. I know it's not the same sector, but the way the stock is kind of I don't want to say set up, but just the history of the stock. Like Ford was at 25. I mean, we were not we, but the proverbial retail we was just hyped over Ford when it was at 17 or 18 or whatever, right?
yeah,
We're back at that 12 to 15 range, kind of where it should be. Um, I think those things got overextended, and that's when you should have been a bear. It's what you always say. That's when you should have been a bear. Is at the top of it, not back here when we're kind of back to where the range it should be at. Um, yeah.
yeah, that right, exactly. And that was my take on the bearish thesis that as we, the June lows, right? People kept wanting to short at the June lows, and a lot of them did eventually break, but a lot of bears ran out of money attempting to break that,
Yeah.
and so like it's that kind of that reverse of that, the market can stay irrational longer than you can stay solvent or whatever. So it's just, when you're at a big support level, you're just ramming your head against the wall, whereas the
Yeah.
the bounces off that support are a little easier to trade. Same
Like
deal with the resistance.
if I was a bear, I would. I mean, you just got to think backwards, I guess. But I would think 200 would be huge, and this thing won't break 220. That's really how I'd be
Yeah.
looking at it. I mean, that's how I'd be looking at it. Like you ran it down from damn near 300 to two. Well, what else do you want? You're
Yeah.
greedy at that point in time. The 200 on the weekly, I mean, you're getting real close to it. It's still 212. Unless you're trying to get all the juice out of that apple, I think you're already there at 220.
Yeah,
I
right.
really
And
do.
my when I turn bearish, it's something like, end phase up over 300 with earnings coming up in 3 weeks. I'm like, they got to bring this down because it's probably going to beat, but it's not going to beat and go to 380 or something. Um, so they'll bring it back down and take it back through the range, and that's what happens. One of my best reads of the past few months, and yeah. So I mean, it's all about kind of spotting your opportunities and not just being bearish all the time on everything or bullish all the time on everything. There's just so much variety in the market that you got to pick your spots.
It's better to be neither.
Yeah.
It really is. It's better to try to stay unbiased. I know it's hard, but it's better to try to stay unbiased.
Yeah.
Anything else you want to put in here? We're right at 30. Um,
Um,
I don't want to cut you off at all.
no, it's I'm good. So I guess I'm BTC real quick.
Okay.
Has this broken out of a range that's at all significant to you, or are we just sort of towards the top of this range bound spot we've been in for a while?
I like how uh, like a week or two ago we were talking about how crypto stocks aren't moving off of Bitcoin anymore, and now we're back to looking at the Bitcoin chart because it hit 21. Um,
Yeah.
it really for me. I think I need the 22. I think I do.
Yeah. Yeah.
Before I call it good. But I mean, you're not, for me, it's, if you look at the chart, you're not going far. Like, even if you get through there, 24, 25 is next. I mean, it's like that all the way to 28 now because it walked down through that zone over the summer, right? Like
Yeah.
it's walked down from about 40 to where we to 20. Let's just use round numbers. So getting back up there, I think you have to get about to the 50% mark, which is 30. 28 is really my number. That before you say, all right, like we're gonna start trending up. I think we just kind of sit in these zones of $1,000 to $2,000 up or down. Um, the changes is we're not 18 to 19 now. We're 2021, and that is a little different than where we were before.
Yeah, and it is a big week for crypto earnings. I mean, Coin's the most clearly crypto stock, but Hood is kind of a crypto stock, and Square has a lot in crypto too. So,
Yeah, yeah. I'm
it's
sure Hood as well. I bet.
yeah,
I'm
yeah,
sure. Yeah, there's a few. Um, yeah, on that regard, Pete. Last week I was like, ERs are stupid. You don't need them. Just wait. This week, find your favorite ER. That's where I'm at. There's just too many good
yeah,
charts. There's too many good charts out there. Too many.
yeah. And if I encourage people who trade options to look at the difference between whether you want to paper trade it or just just follow the contracts. So something that beats, like if I had held this through earnings, what would that look like versus catching it at open whenever it does to do flush and go or whatever. Like what's the difference there? And so like end phase is a perfect example. End phase had ridiculously high implied volatility of 13% or something, which meant that going into it, your options were going to be really expensive, and it crushed everything and did well, and you would have been fine on it, but you actually would have opened red, even like one spot out of the money. You would have been like 300, dip it to like 170 at open, and then went up to like $500. Well, okay, I could just buy it when it opens
Yeah,
and catch the move that way. I mean, it's Meta didn't go like that. Meta was like, you put in $100, you come out with 1,000, but that's rare. That is rare. That's a pure lotto. If you actually just want to trade it, just watch what happens when the opening flush, the IV drops, you get a cheap contract, much less risk, and you have much more control over what happens at that point. So that's something I think that most people learn the hard way about playing earnings. And if you want to see how not to do it, just follow Starboy on Twitter, and and you can see. But yeah, I think that move after the fact has been really good on a lot of stuff.
The guy told me once, man, wait for the report to come out, read it, and if it's okay and it drops, just buy it.
Yeah, yeah,
And it works good. Um, and then you get AA, right, where the report can be real bad and it still drops and comes back. So
yeah. Did you remember my reasoning for saying at leaps were good on that? I was the same with CLF too.
yeah,
Uh,
yeah.
so it was where the commodity was priced, and I said it's sort of like a rubber band. Like they're not really going to let it fall too far. Now AA went way the hell past what I ever expected. I thought we were just going to kind of come back
40.
to even, and it just
Yeah.
went crazy. But yeah,
I think, and I don't like to talk too much about the individuals here or do victory laps, but the end phase, um, the you called that thing perfectly. The whole, I mean, like the whole entire play from the drop to the take back over after earnings. It's just familiarity with the sector, the stock, the chart. Um, it pays off, and you can tell when you do your own work for sure. So, I mean,
yeah, yeah.
you called that perfect. I mean, you called that thing just perfectly. Um, it's like a $65 move on a stock. So crazy to me. All right, well, let's wrap. We're about 35. Let's wrap this up and get into the actual work session here.
Yeah, yeah.